you. Excited to be here again. Thank you for that very nice introduction. And my name is Jonathan Rose. I'm the owner of Active Day Trader. And today I'm going to be talking about my flagship product, and that's called Swinging for the Fences. Swinging for the Fences, it's the foundational course that we have that teaches you how to trade options. It's exactly how I learn, exactly how I teach. What's up, Chris? I think you probably already had a few risk disclaimers today. So this is going to be for anyone who's really committed to making trading work. It's for anyone genuinely looking to put the work in and learn how to trade options correctly. There are no shortcuts in trading. If you need a consistent approach to options or to trading, welcome. I think you'll benefit a lot from this presentation. If I could stop here, and if you guys could just help me out a little bit, on a scale of 1 to 5, help me with your options knowledge, which will help a lot as I go through the examples in this presentation. So 1 being, what's a put and a call? I have no idea. I've never traded options. And 5 being, I can be a market maker. I speak options fluently. There's nothing that I don't know about options. So where would you consider yourself between 1 to 5? And that'll help me as I get through the educational portion, as far as, you know, the pace that I go, how in depth that I go. Awesome. Let me keep going, and then I'll get to those when they all come in. In the next 45 minutes, I'm going to show you how to avoid huge losing trades that offset a series of winning trades, how we can trade confidently so we don't get scared out of good positions, good trades. And then also we'll talk about how to manage your trading portfolio. I'm going to show you how options were intended to be traded, how to scan for these different trades, and how not to trade scared. We also never want to look back, even if you've had a tough time in the past. We're moving forward. So let me get to the replies. Got a couple of ones, 2.5, 3. We got a 5 in there, nice. Okay, fantastic. So for those out there that are not trading options, I think it's really important for you to understand that stock options are the same exact thing. Options are just a derivative of stock. So if you're only trading options, you're putting yourself at a significant disadvantage. If you're only trading stocks, you're putting yourself at a significant disadvantage by not being open to learn about the options market. It does need to be learned, but please understand that options are a derivative of stock. If a stock's trading at 10, options will just allow you to buy that stock at 12. Why would you want to buy a stock at 12 when it's trading for 10? Well, we get massive leverage to have the luxury to be able to do that. That's why we want to do that. So a stock, if it's trading at 10, you could buy it for 10, you could sell it for 10. But an option allows you to buy it for $8, buy it for $9, buy it for $12, buy it for $15, all depending on what your view is in the market. Options can give you an efficient way of expressing that view. And that's really at the core, the difference that I see from professionals versus retail. People who can really, really express their market view in the most efficient way. And the most efficient way is the least amount of risk while putting yourself in position for the most amount of upside. That's being efficient with your trading view, and we can do that through options. Before we continue though, I want to be super clear. This is my profession. I've been doing it for 18 years. I can say definitively without a shadow of a doubt, I'm not going to learn your profession in 3 days or a week or even 2 weeks. If you're a real estate broker, if you're a mortgage broker, if you're an accountant, and I come work for you, how long is it going to be until I add value to you? 6 months, 12 months, 18 months? My profession is no different. What I'm about to show you requires hard work. You must be open and committed. I'm going to show you some results. I'm going to show you a lot of feedback from clientele. They're not all typical. These are the people that did the hard work. Also, I understand that there's a lot of people put in front of you. So throughout this presentation, my objective is to show you as much proof as I possibly can, because you're probably like me, skeptical when you come on these presentations and really don't know who the people are. So therefore, I'm going to be sure to show you as much proof as I possibly can. So let me ask you a few questions. See if these sound familiar. Does anyone out there feel like they're trading better? They're turning the quarter, but maybe their account is not really telling the same story. You feel like you're trading better, but maybe still not really making money. What about, do you feel like nothing will stop you if you learn correctly, but up until now, it's the same generic education? You find yourself getting out of trades too quick, holding losers too long, getting out of winners too quick. What about just being scared in the market? Or others are possibly just burnt out from losing trades, constantly offsetting winning trades. Maybe you're frustrated because you don't have time to be in front of the market. Or others, maybe you feel alone. Let me tell you, this happens to all traders. You are not unique in feeling any of these, okay? If you can relate to any of this, the exciting news I have are, these are just symptoms of a problem that you can solve by implementing a few things. And I'm going to walk you through exactly what those few things are. But before I do that, a little bit more of a formal introduction. My name is Jonathan Rose, been trading since 1997. My first 5 years I spent on the floor of the Chicago Mercantile Exchange, trading NASDAQ and S&P futures. After that, I traded bond futures for 8 years. And then I traded on the floor of the Chicago Board Options Exchange, where I was a market maker. Okay? This is what I do for a living. I grew up in New Jersey, moved to Chicago because I wanted to trade. I always felt like eventually I would move back to the East Coast. That's where my family's from. But I got to meet this lovely woman, had these 2 beautiful children, and now I'm here for good. Life is darn good. That's my beautiful family. And that's exactly what drives me. That's exactly why I trade. I started active day trader at the end of 2015 because I was watching YouTube videos and I felt there was a major void in the market for what I consider to be professional level education. It seemed like everything that was taught were these common themes. Follow the trend. The trend's your friend. You should never buy options. The charts, they never lie. Just follow the charts. Trade the breakout. Trade the trend, trade the micro trend. All these different tricks. True story, I went to one of these conventions, one of these financial conventions, and I was sitting at the bar and someone walked up to me and said, "Oh, you're Jonathan, right? You just started active day trader." It's like, yeah, we started chit-chatting. He said, if you want to sell, if you want to start doing well with the company, you got to present about the Ichimoku cloud. Build an indicator and teach people about the Ichimoku cloud. It's the hottest thing right now. My immediate thought was, what the heck is the Ichimoku cloud? I never even heard of this thing. Been trading for 18 years. Passed the first level of my CFA after studying for 300 hours. And I never heard of these kind of indicators. It was then that I made a commitment to my membership that I will only teach things that I've traded professionally. That's why I specialize in teaching bond futures, trading the yield curve, and also stock options, stock option education. I love this quote from Warren Buffett: risk comes from not knowing what you're doing. Okay? I want to teach you. I want to build your foundation so you can learn to trade consistently, confidently, so you can depend on trading to possibly support your future. Here's the feedback that I get. It's been a long road to find someone who's professional, caring, honest, and trustworthy. To have found you is a great relief for me, and it's exciting. So you guys are here looking for something. I am too. I'm looking for long-term relationships. I'm looking for people that I can shape into consistent, confident traders. And I do that by talking about the 3 pillars. And I want to give you total clarity on what you should be focusing on, because it pains me to see so many traders start learning. But then once they learn from me, they realize how foolish and unprepared they had been in the past. So I laid out these 3 pillars that you need to be successful in trading the options market. Okay? The first one, position management. It's not the sexy stuff. Position management. You need to learn how to protect yourself. So many people can make such drastic improvements if they just learn everything that's available to them in the market that can protect their position. Learning to manage your options position is an absolute requirement for any trader. Let me walk you through an example. ABC stock, it's a phony baloney stock. Let's say it's trading at $10 and together we decide to buy 10 of the 12 strike calls for 40 cents. If we do that trade, you buy 10 of the 12 strike calls for 40 cents. You have $400 of risk and you can never lose $1 more. That's what's so great about buying little options. You can buy one. It's a $40 trade. If that stock goes to zero, you can only lose $40. The way that I teach, the way that I want you looking at this position, and this is even for somebody without any options education. If the stock's at 10 and you're long 10 of the 12 strike calls, you're long 1,000 shares from 12. That's how I want you to look at this position. At expiration, if the stock's under 12, you're going to make the decision not to exercise that position. You don't have to do anything. The exchange knows that you don't want to be long from 12 if the stock's trading at 11. You don't have to do anything. It'll expire worthless. If the stock gets above 12, you're long 1,000 shares from 12. If it's trading 14, what most don't realize when they're trading options is you could just get out of the trade. You might roll that trade into a spread, but what you could also do is you can sell 1,000 shares of the underlying stock. If you do this, you're now long the 10 strike calls, the 12 strike calls, pardon me, and you're short 1,000 shares from 14. Said another way, you're long 1,000 shares from 12 and you're short 1,000 shares from 14. That's it. That's your position. Why do we do this? Why do we do this rather than just covering your options? Great question. Let's say there's 10 days to go until expiration. Let's say all of a sudden ABC stock comes out with accounting fraud. And so it comes out with accounting fraud and the stock drops to 5. If the stock drops to 5, if you just covered your options, you wouldn't be able to take part in this great action for your position. But what you could do if you're long the 12 strike calls 10 times and you're short 1,000 shares from 14 is you can buy those shares back. You make $9,000 on this scalp and your 12 strike calls are worthless. We want to learn how to manage our options position using stock. It's one of the most powerful lessons I can teach you. There are 3 ways to manage your options position. 1, get out. If you're long 10 of the 12 strike calls, sell 10 of the 12 strike calls, you're flat, get out, you have no risk. You can roll it into a spread. If you're long 10 of the 12 strike calls, you can sell the 14s or 15s. Or you can scalp gamma. Scalping gamma is a way to manage your positions when you're trading options from the long side. Jaroslav here has been trading. He went to many webinars. I was subscribed to a lot of services, but only yours gave me real education. By the way, I've been learning options for years. How come nobody ever taught me how to scalp gamma? The second one is money management. Money management, position management are 2 of the most important things that you need to learn. Here's an example. Let's say you hold 4 positions. You're long Microsoft, you're long Google, you're long Tesla, and you're long Amazon. And you look at this as being long 4 positions. Well, I don't look at it as being long 4 positions. I look at this position as being long 1 position. And the example is, if you own a mutual fund and you're curious about the performance of that mutual fund, are you going to look up the individual stocks to find out how your portfolio is doing? Or do you really not care at all? You just want to know how the fund is doing. right? You don't care. You want to know what the fund's doing. Well, it doesn't matter what your positions are doing. It matters what your portfolio is doing. It matters how your positions push and pull against one another. That's another thing. We want to manage from the portfolio level, not from the individual stock level. And when I teach my coaching clients, I love to use this silly cartoon. Sure glad the hole isn't at our end. Well, just like in trading, if one position is killing your portfolio, the hole in the boat is absolutely on your end. It doesn't matter if those guys are there with the buckets. The feedback I routinely get, I finally found a home. I'm in it for the long term. I've wasted enough time and I've wasted enough money. You have something special here. The third pillar, we have position management, we have money management, and now we have confidence. Just like sports, you need to believe in what you're doing. And for that reason, that's why I want people to paper trade as long as they possibly can in order to build up as much confidence as they possibly can. But where does confidence come from? It comes from rules. It comes from boundaries. It comes from education, hard work, performance. But it also comes from finding your why. Finding your why. That means when you do a trade, what's the reason why you're doing that trade? And if the reason why you're doing that trade is because you looked at a chart and you saw a double bottom, or you looked at a chart and you saw a triangle or a breakout or whatever, to that I say, how long is it going to take me for me to teach my 9-year-old what a double bottom is on a chart? How long would that take? 4 minutes? But yet, people are willing to risk their hard-earned money off of something as simplistic as a double bottom or a breakout or a head and shoulders. Every trade that you do, you need to have a why. Here's an example of a recent trade that we did that we had a why. And I'm not saying don't use technical analysis. Use it. But that's one feather in your cap. That's step 10 in a 10-step process. Use technical analysis for trade entry, for stops, for position management. You need to have a reason for every trade. Any of you guys watch that show, All Things Considered, or listen to the podcast, All Things Considered on NPR? I'm a podcast fan. I was listening to the podcast, and it was released that California is going to require all new homes to have solar panels starting in 2020. I didn't know that. All new homes in California starting in 2020 are required to have solar panels. Now we have a trade idea. Now we have a reason, because all the companies that supply solar panels in California probably going to have a ton more demand, because it's a new law, there's new legislation. They are required to buy this stuff. So the next thing that I do is I read the article or I listened to the podcast. I started doing research about the different solar companies based in the US, specifically in California. Then I generated a trade idea. I'll give you the dates. May 17th was this date. June 1st, I shared a trade idea in Run. Actually, we were already in the trade idea. 2 companies, Run and VSLR. Okay. Run, here's where the article was, May 17th. Visler, here's where the article was, May 17th. June 1st was the last page. Here's June 12th. Run up another 4%. Great move. For those long the August 12 strike calls for 70 cents, I would strongly consider selling the 15 strike calls for 70 cents. If you're long 10 of the 12 strike calls for 70 cents, and you're short 10 of the August 15 strike calls for 70 cents, you have zero risk. If Run gets over 15, which it did, you make $3,000 for every 10 options. Whistler. If you own Run, you can also consider locking in a massive profit and use the winnings to add into Whistler, because June 12th was right around here. Run started running and Whistler was still down here. Okay? These are the kind of ideas that we look for. There's always a why. Show you as much proof as I possibly can. These are my personal trades. 515, right when that article came out, bought 30. Oh, I guess this expired. Didn't get, so I do a lot of this, guys, where I'll work orders trying to get filled. Expired mean I didn't get filled. Got filled on May 17th, 40 cents. That's $400 of risk. I can never lose more. I bought 2 more here, and I bought 10 here. I guess for a total, I had 34. But you can see, buying 34 of them for about 30 cents, and then taking them off for $1.20. Those are the trades that we're looking for. Okay? About $900 of risk to make $19.40 over a 1-month period. But again, we had a reason, we had a why. Every trade that we do, we need to have a why. Here's another example of a trade that I teach, a trade that I do, a trade that I think is a great risk reward for all retail traders. Is anybody familiar with lockup trades? Here's an example of a lockup trade. Let me walk you through it. This is really important, guys. I want you to know this. Lockup, LAUR, IPO'd February 8th. When it IPO'd, 35 million shares were available to trade. Cool. The lockup date is 6 months from the IPO. At that time, an additional 133 million shares that were previously restricted are now available to trade. So at first there were 35 million shares. 6 months later, 133 million that were restricted are available to trade. The average daily volume on LAUR is only 300,000. I shared a trade idea with my members July 13th. IPO 35 million shares. Think of this like you're a teacher and you have tenure and you just got a $100,000 bonus from LAUR, but you didn't just get a bonus, they gave you $100,000 worth of stock. But when they gave it to you, they said, congratulations, we're thrilled that you've been with us for so long. We're gonna give you 100,000 shares, but you can't sell it for 6 months. Because we don't want everybody who we give shares to sell on the IPO, and then it's gonna look horrible for the company, right? We're in it together. Okay, fine, let's do it. You get your 100,000 shares, the stock rallies, it gets up to 15, it's now worth 125. You're excited, you wanna get out, but you're not allowed to get out because they're restricted. Stock goes back down, bummer. Rally, 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 you get excited. You wanna take it off, you want your stock to be unrestricted, but you still can't sell. Professionals are gonna get in here, share the trade idea, lockup comes. What's gonna happen when there's a lockup, guys? There's 133 million shares coming to market and only 35 million shares trade. Stock's gonna get annihilated, right? Yeah. And that's exactly what the stock did. Options expiration, stock goes from 17.5 down to 13. Okay? That's how a lockup trade works. Another example of a lockup trade is Roku. Trade idea shared right here, which is February 21st. I bought 30 contracts, 45 puts on February 21st right here. This is the lockup date. Positions now worth, you bought them for 520, positions now worth 11 to make 17 grand. Another lockup trade. VNTR, here's the lockup. Another lockup trade. Smoked right after. Vinter, I took 100% profit, rolled it into a spread, 100% profit, all good. Highly reliable trades that retail traders should be taking advantage of. Here are clients: Vinter, LAUR, Send, LAUR, and this is Roku down here. Up 117%, up over 100%, up over 100%, up over 100%. Okay? Really, really cool, powerful trades. Has anybody ever been taught not to buy options? Don't buy options. Buying options is scary. Has anybody ever been taught that? I hear that a lot when I'm talking with my clients. Common sense says to me, if half the people are selling and half the people are buying, but yet everybody is teaching not to buy options, there's probably some pretty good edge in learning how to do what everybody else is afraid of. Buying options versus selling options. I want to show you this because I want you to get rid of the misconception that it matters how many winners what percentage of winners do you have? When people tell me that they're doing trading so well, they make money 90% of the time, I just shake my head. It doesn't matter if somebody makes money 10% of the time or 90% of the time. If you make money 90% of the time, and 90% of the time you're picking up pennies, and 10% of the time you're losing, dimes, 80% stinks. If you're making money 10% of the time and you're losing pennies 90 times and you're making dimes or quarters 10% of the time, that's cool. So don't get caught up in winning percentage. It doesn't tell an efficient story. When you buy options, you're going to lose more often than not. But when you win, you want to win far more than you risk. When you buy options, think of it like you're risking $1 to make 5. When you sell options, it's the opposite. I can teach you an option strategy where you sell options and make money 99% of the time. But that 1% of the time, you are going to get annihilated. And nobody wants that. When you sell options, think of it like you're risking 5 to make $1. I don't want to do that. I want to be in a camp that risks a small amount, that I can never lose more, that I'm in position to make a whole bunch of money if I'm right. Volatility. I'm going through these because this is how I teach options. It's common sense. This is learned from the School of Hard Knocks. I'm not going to take you through all the Greeks and show you how smart I am. I want to simplify things for you as much as possible. So volatility. When you're trading options, actually this slide should go first. This is the 5 inputs of the Black-Scholes model. The 5 inputs, that's the only inputs you need to value options. 4 of them are given to us. There's only one darn thing we need to figure out, and that's volatility. So if anybody's out there trading options without understanding volatility, without analyzing volatility, please understand the only thing we need to figure out when we're trading options is volatility. So again, you're probably not seeing the whole story if you're just using options to speculate or to guess on direction. Here's the power of volatility. 30 days to expiration, a low volatility stock and a high vol stock. Let's call it the same stock. ABC trading at 20 bucks, ABC 20 bucks, 30 days until expiration. The 22 calls are trading for a dime over here. The 24 calls are trading for 0. The market is saying there's a 0% chance of ABC trading above 24 at expiration. That's why they're trading for 0. Now, does that really mean there's a 0% chance? No. That does really mean that the market participants are valuing this at 0%. 22 calls are priced at a dime. It's a low vol stock. The stock moves between 1950 and 2050, 19 to 21. It doesn't really move very much. That's why they're so inexpensive. A dime, a dime. But this guy over here, it's like a solar stock. It's all over the place. This stock trades down to 17. It goes to 24, back down to 19, up to 25. So with 30 days to go until expiration, the 22 calls aren't worth a dime like this guy, they're worth 80 cents. So if you want to buy 1,000 shares at 22 with the stock trading at 20, it's going to cost you $800. The low vol stock, it's only going to cost you $100 because there's a lower probability of the lower vol stock making that kind of a move. That's the significance of volatility, of vol pricing. This is really important because I always get the question of, Jonathan, very interesting presentation. You covered a lot of things that I never knew of. What's your return? What's the return that I can expect? And I can definitively tell you that if 10 traders take the exact same trade, 100% of the time, you are going to get 10 different results. Does that person know how to scalp gamma? Are you doing a trade relative to the rest of your portfolio? Are you doing a trade to hedge? How are you managing the trade? Anybody who's telling you returns, be a little careful with that. 10 different people take the exact same trade, you'll always get 10 different results based on the quality of that trader, based upon the quality of that trader's education. Now, before I talk about my flagship product, something really cool happened to me. I started Active Day Trader at the end of 2015, and I'm really appreciative to be here with Market Traders Institute. But I'm a lot smaller than others. But I got a random email from Jim Cramer, where Jim Cramer reached out to me, or reached out to a friend of mine, and he sent these emails. He said, wow, this guy is great. This guy's amazing. Tell him I want to be on his podcast. We're reviewing your guy at the highest level. I think he's a star. Out of nowhere. So naturally, when Jim Cramer emails you and says he wants to be on your podcast, the next thing I naturally do is I had to start a podcast. I started a podcast. I was fortunate and appreciative to interview Jim Cramer. I talked over different strategies that I teach. One of the things that we talk about is the lockup trades, and he was blown away. He loved it. He thought it was such a great vehicle for retail traders to look at because it's a fixed amount of risk. You know exactly what the risk is before you get into the trade. It's a high probability of success, and you can make a whole bunch of money. So I was really appreciative of this, very excited to share it with you. The 3 pillars. I want you to learn position management. I want you to be a superstar at money management. I want you to fall in love with your statement. I want you to look at your statement every single day. I want you, instead of to have stops in the market, I want you to have stops in your trading account. If your trading account's 50,000, instead of having a stop in the individual stock that you're trading, I want you to have a $48,000 stop of your entire account. Today, I promise to show you the things that you need to be successful trading. I wanted to walk through the importance of position and money management. And then I want you to see how it's absolutely possible to find these low risk, high reward trade opportunities. It all comes down to finding your why. Do the work. Trading rewards those who are going to put in the effort, who are going to do the work. So let me take this time to tell you about swinging for the fences. Again, I said this earlier, I only teach things that I've traded professionally. It's very simplistic. I have a foundational options program, Swinging for the Fences. I have a foundational bond futures program called Bond Bootcamp. That's it. After that, I have a 6-month coaching program for options or for futures. That's it. I don't have 1,000 products. I keep it very, very simple. For anybody who's in my foundational options course, the reason why it's so popular is because you get a live class on the last Wednesday of every month. You get a live options class, 60 minutes, not a sales presentation. This is a sales presentation, by the way. The options class is going to be next Wednesday. It's the last Wednesday of every single month. And once you're in that, you're in it forever. Compti, I'll answer your question at the end. Okay? I know nothing will stop if you learn correctly. I first started this with anybody who moves forward, you get one class. But then the feedback that I was getting was, I'm sick and tired of working with people and then having questions and the program's over. So I said, okay, fine. We're going to do a live class the last Wednesday of every single month. What's that worth? Classes are usually $297. After 24 months, you'll have 24 classes. The immediate benefits, you're going to have defined risk. You're going to be able to set it and forget it. If you're not around the market all day, great. Put these trades on. The efforts in the research. Once you put the trade on, if there's 30 days until expiration, you're in it until expiration. You don't trade, you don't use stops when you're trading options. You don't do it. The options market, the bid ask is too wide. You learn to manage your account. It's super straightforward. It's going to protect you. How is it going to protect you? If the market's down 20% tomorrow, it's not going to be, but phony baloney, if it is down 20% tomorrow, we're long little puts. You're going to be protected. It's the foundation, trade options forever. Here's Paul. Paul sent me a video. Paul said the two greatest benefits of swinging for the fences were, one, his account, a relatively small account, 6,000 is now 11,000. But the second thing, which I take more pride in, he's playing golf during the day. He's having lunch with his wife. He doesn't feel like he's a slave to all those, radiation machines in the back. It frees him up. It gives him a life. It allows him to spend his time reading and researching and finding these different trade opportunities. Who is this for? If you're looking for consistency in your trading, if you're looking for confidence in your trading, if you want to do something just different, if you want to learn a different way to approach the market, finally, you need to be willing to do your part because it does take work. What else do you get? I know there's a lot of people out there wanting to teach you. I want to make this long term because I want you to know that I'm never going anywhere. What you're also going to get that you can start watching immediately is you're going to get the 2-hour workshop that explains the swinging for the fences approach. It'll teach you how to scan using a completely free scanner. We use FinViz, completely free, great scanner, finviz.com. Trade, and then how to manage your options position. It's a 2-hour workshop. So right now you're going to get live options class the last Wednesday of every month, 2-hour options training that you'll get right now. What's the catch? There's no catch. Here's the reason I'm doing this. I've seen and heard horror stories from my clients. Many of them and many of you have spent so much money. Maybe they feel isolated. Others are just darn frustrated. I know I can teach you the proper way to trade options. So that's why I want you to know, but I want you to feel that I'm not going anywhere. Because again, my focus is on long-term relationships. That's how I know I can help you. To make this a no-brainer, because I know you got to listen to a lot of great presenters today, I'm going to add 2 special bonuses. Here's the first bonus. When I talk about managing positions with stop, I'm always getting a lot of questions from people on that. So I'm going to include a 60-minute workshop called 3 Ways to Manage Your Options Position. This workshop sells for $197 and will be included with this offer. So overall, if we stack it all together, you get this. I asked my Swinging for the Fences clients, what's your favorite aspect of swing, guys? How can I make it better? What do you like? What's working for you? 32 people responded. 32 out of 32 are very, very positive. Gamma scalping, lifetime, feeling confident, big money potential, access to Jonathan, continued monthly classes. You are the guru. It's another way to look at the market, thinking outside of the normal trading traditions, forever, Jonathan's honesty and passion, Q&A, review methodology, learn to fish on your own. Playing volatility, no BS, genuinely helpful spirit. Okay, Again, everything that I teach you, I learned from the School of Hard Knocks. Thanks again from someone who is going to give up trading altogether. Your workshops have been invaluable. The beauty of this to me is being able to have a life outside of my trades. I always like to say that you have two choices. I want you to think of what you value this opportunity at. You're getting unlimited classes from a professional market maker. Think about what you would value this at. It's a one-time payment. It's not a reoccurring payment. I have one more bonus that I want to add. Lockups. Lockups are a trade that I think that all retail traders should be following, should be learning about, and should be researching for opportunities. So I'm also going to throw in a 1-hour workshop on lockups. So the immediate content you'll get is you'll get 4 hours. 2 hours is going to teach you the swinging for the fences approach with different scans and teaching you how to put those trades in. 1 hour is going to be on position management, 3 ways to manage your options position. And then there's a 1 hour on lockups. That's going to teach you how to find these different trades. Easily a $10,000 plus value. For anybody who'd like to move forward, it's a one-time payment, not $497, $297. For $297, you get an invitation to a live options class the last Wednesday of every month. So in 2 years, you have 24 classes. In 3 years, you have 36 classes. And then you get 4 hours of content that you start absorbing right away. Part of that 4 hours is that lockup trade, is that lockup approach. Okay? For anybody who would like to move forward, activedaytrader.com/swing. If you have any questions, that's my direct email. Confi wants me to show you my trading account. Confi, I'm not showing you my trading account. What I do is I'm going to teach you, buddy. I'm going to teach you exactly how to find these trades. You cannot expect to have the returns that I've had. You cannot expect to have returns of my coaching clients who've worked with me for 2 years. Okay? You need to learn important information like skew. Okay? Like how to look at calls relative to puts, how to price specific options, why there is skew in the market, why are calls priced lower than puts are priced. That's skew. You need to know that. You need to learn how to scalp gamma. You need to learn how to manage your positions with stock. So therefore, anybody's trading account that you look at in the performance of their trades is not going to be relevant to you. Okay? Even that idea with the solar stocks. I must have had half the membership take those trades. You're getting all kinds of results. Retail traders naturally want to cover positions too quickly. Does anybody feel like they do that? Does anybody feel like they end up covering positions just way too quickly, or they lock in winners way too quickly and let their losers run? We need to break that habit. That doesn't change unless you change it. Okay? That's why I wanted to do this, guys. Hopefully you'll think it's a fair offer. Again, this used to include 1 class, but the feedback after talking with, 20 plus clients was they wanted to know that they could always ask questions, that they could always come to continuing education. So for $297, this is my foundational options course. This is exactly how I teach options.